Hey traders, Nick here doing some homework after hours. Just got wrapped up with the members. So we had a pretty successful day in the trading room today. We were live. We had about 350 people of all styles. So it seemed like it was random. Just to get you situated as to how we came into today, we came in with negative sentiment out in the street because we had a couple of days where they were disappointing, following somewhat of a disappointing Friday. So the sentiment, the feelings are negative. But we had a lot of things to look up for. And we were like talking about yesterday what could be going on. What has changed, if anything? And we noticed a few discrepancies between the VIX, and which is the fear gauge, and the S&P. So the thought that I presented yesterday, that it doesn't happen often where for 7 or 8 days both the VIX and the S&P are trending down in a descending channel, like they're both in trouble. So which means that because the VIX measures volatility about a month out, so that told me that the people in charge, the market makers, as they say, were okay with things a month out. So whatever was going on yesterday and the day before is just limited to just now. So today we came into the day negative. Overnight was, here we go again, selling off. And then we ended up with a pretty strong day, and in a violent manner. Now, I know somebody will say, because somebody said something. I'm going to prove it to you that it's not because somebody said something, and you could have lined it up that way. So we're looking at the S&P SPX. This is 30-second charts. We can even go to 1-minute charts. So this is how we started the day. By the way, the point of this video is to open up the possibility, to open you up to the possibility that it's not about the headlines, and it's about being ready. And so we were ready, and we ignored the headlines. And what the headlines did, they prompted the move that was going to happen anyway. But they expedited it. Maybe they brought it upon maybe an hour earlier, and they made it bigger because of it's emotional. Because that's how stupid we've become, the collective we, the market. We are slaves to headlines, and I'm urging you to tether yourself away from that, cut yourself away from that tether, I should say. All right, so the market opened down, you can see, and somewhere around here, how we were ready for a pop, potential pop. And I'll tell you the logic that got us there. So somewhere around here, the score was still red. If you looked at the scoreboard, the SPX, the QQQ, they were still red. And the VIX, the fear factor, fear gauge, was still greenish. So this is where I made a statement that kind of reminded me to look up more so than down. I said, even though the scoreboard is red, the entire day, not for a minute, were the bears in charge. The bulls were in charge of the entire day. And the reason I say that is because even though we opened down, they bought every dip all morning. And then they went sideways. And then they broke out. So just to prove to you that it wasn't fluke, you can go out and look at my Twitter feed or StockTwits feed. I don't know if I sent it to Twitter. I drew this arrow. I said the buyer's in charge when I said the bulls are the buyers in charge because they're buying every dip, and the sellers are trying to defend one line. And the line happens to be exactly the gap fill. So how many times will they defend it? 1, 2, 3, 4, and the fifth one, oh, headline broke. That's what happened. The headline just broke. But they tried 5 times with higher lows. It was inevitable. When you have higher lows, the bulls are gathering steam, the bears are getting tired, and then when they breach, they overwhelm. So, okay, they breached in a bigger way because of the quote headline. But the headlines were cutting on the way down. So you can't count it one way and not the other. So the goal is to realize, to see if you're good enough to catch the nuance that even though the score was red, the bulls were in charge. And when the bulls are in charge, I usually side with the breakout, not the breakdown, especially if we have evidence of higher lows. So that was the reason why when I opened the day, I shared a bullish setup, and I usually share an opposing bearish setup. And I did share it, but I said I wouldn't take it because of several reasons at the time. Those who took it had some profits temporarily, but if they didn't close it, they got caught with it. And hopefully they managed it quickly enough to get out of trouble. But this was bigger than it should have been because of us being slaves to headline. And we make mistakes. Sometimes we're lucky. We get on the lucky side of things. But to avoid the whole thing, just avoid the headlines for trading purposes. I promise you, they're not going to make you a better trader. If anything, they get my emotions involved, and then this is why I get emotional, and I act without my brains. I act with my heart. That's not a good idea in trading or investing. So how did the day end? Super strong. So what happened? The fear got shellacked. This is fear, VIX. Okay, and I wanted to show you what I meant by the VIX and the S&P. So this is the last 8 days. All right, and if I draw this, watch that. And watch what I'm going to do here. I'm going to swap it out with the SPY. And, whoops. And you can see that the SPY is also in the same descending channel. This is crazy, right? This is the SPY and this is the VIX. This is the same 8 days. So we had clues that there's something going on. And I said, I'm mad enough to admit that I'm missing a piece of the puzzle, so I get cautious. And this is how active traders can prepare for the day, by knowing that you're missing a piece of the puzzle. So expect the unexpected. Crazy things happen. So what? So you book profits and losses earlier than usual. You lower your expectations, like your confidence level. Like if you usually have conviction that much, even if you have the same that much conviction, you should knock it down a notch, just because you should realize that you are missing a piece of the puzzle. I am. You are too. Maybe you don't want to admit it, but most people are. There's some things going on that have never happened before. So even the so-called experts and the people in charge may or may not be in charge. Powell doesn't know what the fudge is going on. And the government may or may not know exactly what's going on every level. So there are question marks everywhere. Conviction should be knocked down a notch. All right, so the goal of this video is not to tell you how to trade long term. That goes for, in video format. I share it with the members. If you want to trade with friends, join the group. And the opportunity to make mistakes becomes a lot smaller when you're trading with 350 other people, 330, 360. And if you say, hey, I'm thinking of doing this, somebody's going to stop you if they see something. So the group, the collective, does a lot better than individuals anyway. And just that many more opportunities for breakouts and breakdowns and scans, and different people are sharing trade ideas. So trade with a gang of friends that you can trust. Stop trading alone.